You know what's funny about trading? Most people think they're getting better when they're actually getting worse. They celebrate a winning streak, convinced they've finally cracked the code, only to blow up their account 3 weeks later. But here's the thing nobody tells you. The moment you actually start becoming a profitable trader, it doesn't feel like winning at all. It feels uncomfortable. It feels wrong. It feels like you're betraying every instinct that got you excited about trading in the first place. And that's exactly how you know it's working. Today, I'm going to walk you through 7 signs that prove you're finally turning into a profitable trader, and I promise you, most of these signs will make you question whether you're doing the right thing. But stick with me, because by the end of this, you'll understand why the traders who make real money look nothing like the traders you see on social media. They're not driving Lamborghinis after 3 months. They're not posting screenshots of 1,000% gains. They're quietly, methodically, almost boringly grinding out consistent returns while everyone else is chasing the next big score. So, if you've been trading for a while and you're starting to feel like you're becoming a different person, like the excitement is fading and being replaced by something else, something more calculated, then pay very close attention because you might be closer to profitability than you think. Let's start with the first sign, and this one is going to sound completely backwards to most people. The first sign you're turning into a profitable trader is that you've stopped trying to hit home runs. You've stopped looking for that one trade that's going to change your life. You've stopped scrolling through forums at 2 in the morning looking for the next 100-bagger stock tip. You've stopped feeling that rush of adrenaline when someone mentions a ticker symbol that's about to explode. And here's why this matters so much. When you first started trading, you probably got into it because of the big wins. You heard a story about someone who turned $5,000 into $50,000 in a month. You saw a screenshot of a position that went up 300%. You watched a video of a trader talking about how they made more in one day than most people make in a year. That's what hooked you. That's what made you think trading was your ticket to financial freedom. But here's what nobody told you in those early days. Those big wins, they're not repeatable. They're not sustainable. They're not a strategy. They're lottery tickets. And just like lottery tickets, they're designed to keep you playing, not to make you wealthy. The profitable trader understands something that the losing trader doesn't. Profitability isn't about maximizing your best trades. It's about minimizing your worst ones. It's not about how high you can fly as heat. It's about how well you can avoid crashing. When you stop chasing the bakitim 10-bagger and start appreciating the consistent 15% annual return, that's when you know your mindset has shifted. That's when you know you're thinking like someone who's going to survive in this game long enough to actually make money. The shift happens gradually, and you might not even notice it at first. You'll find yourself passing on trades that the old you would have jumped into without hesitation. Someone will tell you about a company that's developing revolutionary technology, and instead of immediately buying calls, you'll think about the risk-to-reward ratio. You'll consider the probability of success. You'll ask yourself whether this trade fits your strategy, whether it aligns with your rules, whether the potential gain is worth the potential loss, and more often than not, you'll decide to pass. This doesn't mean you've become fearful or overly conservative. It means you've developed discipline. You've learned that the market will always be here tomorrow, that there will always be another opportunity, that missing out on one potential winner is infinitely better than participating in one definite loser. The profitable trader knows that capital preservation is the foundation of wealth building. You can't compound returns if you keep losing your capital, chasing unlikely outcomes. You can't build a trading account if you're constantly swinging for the fences and striking out. The mathematics of trading are brutal and unforgiving. If you lose 50% of your account, you need to make 100% just to get back to break even. That's not a sustainable way to build wealth. That's a guaranteed path to eventual ruin. So when you notice that you're more excited about a solid base hit than a potential grand slam, when you find yourself more focused on consistency than on spectacular gains, when you start measuring your success by what you didn't lose rather than by what you won, that's sign number 1 that you're finally becoming a profitable trader. Now let's talk about the second sign, and this one might sting a little bit because it's about your relationship with other traders. The second sign you're turning into a profitable trader is that you've stopped caring what other traders are doing. You've stopped comparing your returns to theirs. You've stopped feeling jealous when someone posts a massive win. You've stopped feeling superior when someone posts a massive loss. You've completely detached your emotional state from the performance of other people's portfolios. And this is harder than it sounds because trading can be an incredibly lonely profession. And the natural human instinct is to seek community, to compare ourselves to others, to find validation in our peer group. But here's the problem with that instinct in trading. Every trader has a different account size, a different risk tolerance, a different time horizon, different goals, different strategies, different levels of experience, and different life circumstances. Comparing yourself to other traders is like comparing your Chapter 3 to someone else's Chapter 20. It's meaningless, it's counterproductive, and it will absolutely destroy your mental game if you let it. When you were a newer trader, you probably spent a lot of time in trading communities, forums, Discord servers, Twitter feeds, wherever traders congregate to share ideas and talk about their positions. And there's nothing inherently wrong with that. Community can be valuable. Learning from others is important. But somewhere along the way, if you're becoming a profitable trader, you noticed that all that input was actually creating noise. You noticed that when someone posted about a huge gain they made on a trade you passed on, it made you second-guess your own decision-making. You noticed that when you saw someone's portfolio up 40% while yours was only up 12%, it made you want to take bigger risks, to trade more frequently, to abandon your strategy in favor of whatever they were doing. You noticed that external validation and external comparison were pulling you away from your own trading plan, your own rules, your own methodology, and that's when something clicked. That's when you realized that the only comparison that matters is you versus your past self. Are you making fewer mistakes than you were 6 months ago? Are you following your rules more consistently than you were a year ago? Are you more disciplined, more patient, more analytical, more objective than you used to be? Those are the only questions that matter. The profitable trader understands that trading is not a competition with other traders. It's a competition with yourself, with your own psychology, with your own weaknesses, with your own tendencies towards self-sabotage. This realization usually comes after a painful experience. Maybe you jumped into a trade because you saw 5 other traders talking about it, and it ended up being a loser. Maybe you abandoned a perfectly good strategy because someone else's strategy was producing better short-term results, only to realize later that their strategy wasn't sustainable or didn't fit your personality. Maybe you held a losing position too long because you didn't want to post a loss in a chat room where everyone was posting wins. Whatever the specific catalyst, you eventually learned that other people's trading journeys are irrelevant to yours. You learned that the market doesn't care about your social standing among other traders. You learned that the only opinion that matters is the market's opinion, and the market's opinion is expressed through price action, not through likes and comments and congratulations from strangers on the internet. So you stopped posting every trade. You stopped checking what everyone else was doing. You stopped seeking validation. You started treating trading like the serious business it is, like the profession it needs to be if you're going to succeed. You started keeping your wins and your losses private. You started focusing on your own metrics, your own progress, your own development. And paradoxically, that's when you started improving faster than you ever did when you were constantly comparing yourself to others. The third sign you're turning into a profitable trader is that you've become obsessed with your process rather than your results. This is a massive psychological shift that most traders never make, and it's one of the key dividing lines between those who eventually succeed and those who blow up their accounts repeatedly. When you first started trading, you were focused entirely on outcomes. Did you make money today? How much? What's your account balance? Did that trade work out? Every single trade was measured by its result, and your emotional state rose and fell with each winning or losing position. You were on an emotional roller coaster, celebrating the wins, devastated by the losses, constantly checking your profit and loss, constantly refreshing your portfolio value, treating each day like a referendum on your worth as a trader. But something fundamental changes when you start to become profitable. You begin to understand that in the short term, results are largely meaningless. You begin to understand that you can make a perfect trading decision and still lose money. You can follow every single rule in your playbook, execute flawlessly, and the trade can still go against you. And conversely, you can break your rules, trade emotionally, make terrible decisions, and occasionally get lucky and make money. If you judge yourself purely by results, you're going to reinforce the wrong behaviors. You're going to think that lucky wins validate bad decision-making. You're going to think that unlucky losses mean your strategy doesn't work. The profitable trader evaluates every trade based on whether they followed their process, not on whether they made money. Did you wait for your setup? Did you enter at the right level according to your rules? Did you size the position appropriately for your risk management plan? Did you place your stop loss where it needed to be? Did you take profits according to your strategy? Or did you let emotions override your plan? These are the questions that matter. These are the metrics that determine long-term success. Because here's the mathematical reality of trading that many people never fully grasp. If you have a strategy with a genuine edge, meaning it wins more than it loses over a large sample size, then the only thing standing between you and profitability is execution. The only thing that can destroy a winning strategy is the trader who refuses to follow it consistently. Most traders fail not because they lack a good strategy, but because they lack the discipline to execute that strategy through the inevitable drawdowns and losing streaks. They abandon ship at exactly the wrong time. They start second-guessing and tinkering and making exceptions right when they need to be doubling down on their process. The shift to process-focused thinking usually happens after you've experienced something specific. You've had a stretch where you followed your rules perfectly and still lost money. You've had a losing week or a losing month where, objectively analyzing each trade, you couldn't have done anything differently. Everything was executed correctly, but the market just didn't cooperate. And instead of spiraling into self-doubt, instead of questioning whether trading is even worth it, you realized something profound. You realized that you can control your decisions, but you cannot control outcomes. You can control your entry, your exit, your position size, your risk management, but you cannot control whether the market goes up or down after you enter. You cannot control whether earnings beat expectations, whether a geopolitical event crashes the market, whether a tweet from a CEO sends a stock soaring or plummeting. Once you accept this reality, once you truly internalize it, your entire relationship with trading transforms. You stop taking losses personally. You stop treating wins as validation of your intelligence. You start keeping a detailed trading journal, not to track your profit and loss, but to track your adherence to your process. You review your trades and ask yourself, did I follow my plan? Not, did I make money? You start to notice patterns in your behavior. You notice that you have a tendency to cut winners too early on Tuesday afternoons. You notice that you overtrade after a big win. You notice that you hesitate to pull the trigger on your best setups when you're coming off a losing streak. And because you're focused on process, you can actually fix these problems. You can create rules to counteract your psychological tendencies. You can build safeguards into your trading plan. You can improve systematically, incrementally, measurably. The outcome-focused trader has no such advantage. They're just riding an emotional wave, hoping the next trade goes their way, with no framework for improvement, no methodology for development. They're essentially gambling and calling it trading. But you've become a professional. You've embraced the unglamorous truth that trading success is built on boring consistency, on doing the same things the same way over and over again, on trusting that if you take care of the process, the results will take care of themselves over time. The fourth sign you're turning into a profitable trader is perhaps the most counterintuitive of all, and it's this. You've started to find trading boring. Yes, boring. The thing that used to give you an adrenaline rush, that used to make your heart pound and your palms sweat, that used to occupy your thoughts from the moment you woke up until you went to sleep, has become routine. It's become methodical. It's become, dare I say it, predictable. And this is exactly what needs to happen for you to make money consistently. The excitement you felt as a new trader, that was your brain's reward system lighting up in response to uncertainty and risk. That was the same neurological pattern that makes gambling addictive. That feeling of not knowing what's going to happen, of having money on, the line of watching prices move in real time. It triggers dopamine release in your brain. It feels good. It feels exciting. And that's precisely the problem. Because trading driven by the need for excitement is trading driven by emotion, and emotion is the enemy of consistent profitability. When you need trading to be exciting, you make it exciting. You take trades that don't quite meet your criteria because you're bored and you want action. You increase your position size beyond what your risk management allows because normal-sized positions don't give you that thrill anymore. You hold losers too long because closing them would mean the excitement is over and you're not ready for it to end. You chase price, you revenge trade, you overtrade, you do all the things that destroy accounts, all in service of maintaining that emotional high. But the profitable trader has moved beyond all of that. They've recognized that excitement and profitability are inversely correlated in trading. The more exciting your trading feels, the more likely you are to be making mistakes. The most profitable trading sessions are often the most boring ones. You wait patiently for your setup. It appears. You enter exactly according to your rules. You place your stop. You walk away. Maybe you check once or twice to see if your profit target hit or your stop got taken out. Either way, you accept the result, you log the trade, and you move on. There's no drama. There's no emotional investment. There's no story to tell. It's just execution of a repeatable process. This is what professional trading actually looks like, and it's nothing like what social media would have you believe. The traders making real money aren't posting screenshots and celebration emojis every day. They're quietly executing their edge, trade after trade, week after week, month after month, with no fanfare, no excitement, no emotional volatility. They've turned trading into a business, and like any successful business, it runs on systems and consistency, not on adrenaline and hope. You know you've reached this stage when you can have a significant position on and go about your day without constantly checking it. When you can take a loss without it affecting your mood. When you can have a winning day and feel exactly the same as you feel on a losing day. When you stop telling people about your trades because honestly, there's just not that much to say. You followed your plan. You took the trade. It worked or it didn't. End of story. This emotional flatness, this lack of reaction, this is the hallmark of professional trading psychology. It doesn't mean you don't care about the money. It means you care more about the long-term process than about any individual outcome. It means you've developed the emotional regulation that's absolutely essential for survival in the markets. And I'll tell you something else about this boredom. It actually serves a protective function. When trading becomes boring, you trade less. You trade better. You stop forcing trades because you're not seeking that emotional hit anymore. You become perfectly content to sit on your hands for days or even weeks waiting for the right setup because you're not addicted to the action. You're committed to the edge. This is the mark of maturity in trading. This is what separates the professional from the gambler. And if you're starting to find that your trading isn't giving you that rush anymore, if it's starting to feel more like work and less like entertainment, congratulations. That's not a sign that you should quit. That's a sign that you're finally doing it right. The fifth sign you're turning into a profitable trader is that you've developed an almost paranoid respect for risk. Not fear, mind you, but respect. You've stopped thinking about how much you could make on a trade and started thinking first, second, and third about how much you could lose. This isn't pessimism, and it isn't lack of confidence. It's survival instinct honed by experience, by losses, by watching your account balance drop, by feeling the sick sensation in your stomach when a position moves against you faster than you thought possible. Every profitable trader I've ever studied or spoken with shares this common characteristic. They think about risk constantly. They calculate it before every trade. They monitor it during every trade. They review it after every trade. Risk management isn't something they do alongside their trading. It is their trading. Everything else, all the technical analysis, all the fundamental research, all the pattern recognition, all of that is secondary to the primary question of how much am I willing to lose if I'm wrong? Because here's what you've learned through hard experience. You will be wrong. Often. Even the best traders in the world are wrong 40, 50, sometimes 60% of the time. The difference between them and losing traders isn't that they're right more often. It's that when they're wrong, they lose small, and when they're right, they let their winners run. It's that they never, ever put themselves in a position where a single trade or even a series of trades can knock them out of the game. When you were a newer trader, you probably thought about position sizing in terms of how many shares you could afford to buy. If you had $10,000 in your account and a stock was trading at $50, you could buy 200 shares, so that's what you did. Or maybe you got a little more sophisticated and started thinking in terms of buying power, using margin to increase your position size, convincing yourself that the extra leverage was fine because you were confident in the trade. But you weren't thinking about risk in any meaningful way. You weren't asking yourself, what happens if this goes to zero? What happens if this gaps down 20% overnight? What happens if I'm completely wrong about this thesis? Now, though, now you think differently. Before you even consider entering a trade, you decide how much of your account you're willing to risk. Maybe it's 1%, maybe it's 0.5%. Maybe on your very best setups, the ones you've back-tested extensively and have the highest confidence in, you'll risk 2%. But that number is decided first, before you know anything else about the trade. Then and only then do you work backwards to figure out your position size. You identify where your stop-loss needs to be based on technical levels or volatility, or whatever your strategy dictates. You calculate the distance between your entry and your stop. And then you do the math to determine exactly how many shares you can buy such that if the stop gets hit, you lose exactly the amount you predetermined you were willing to risk. Not a dollar more. This seems like such a simple concept, but the vast majority of traders never do it. They never actually calculate their risk per trade. They never decide in advance how much they're willing to lose. They just enter positions based on conviction or excitement or tips they heard, and they figure they'll deal with the downside if and when it happens. And then it happens, and they're not prepared, and they hold and hope, convincing themselves the stock will come back, telling themselves they'll sell when it gets back to break even, riding it down and down and down until finally they capitulate at the bottom, taking a massive loss that wipes out weeks or months of gains. You've been there. Every trader has been there. But you learned from it. You learned that hope is not a strategy. You learned that conviction doesn't move markets. You learned that no matter how sure you are that you're right, the market can stay irrational longer than you can stay solvent. And so you built risk management into the foundation of your trading. Not as an afterthought, not as something you do when you remember, but as the primary lens through which you view every opportunity. You've internalized the truth that legendary trader Paul Tudor Jones articulated when he said that his metric for everything he does is the 5-to-1 ratio. He's always thinking about making $5 for every dollar he risks. Not 5-to-1 reward to risk on paper, but 5-to-1 in actual practice, in real trading, accounting for the fact that not every trade will work. This obsession with risk manifests in other ways too. You've probably become much more aware of correlation in your portfolio. You've realized that having 5 different positions that all move together isn't actually diversification. It's concentration, disguised as diversification. If you're long 5 tech stocks and the tech sector sells off, you don't have 5 separate risks. You have one risk expressed 5 times. So you've started thinking about how your positions relate to each other, about what scenarios could cause multiple positions to move against you simultaneously, about sector exposure and market exposure and factor exposure. You've started thinking about portfolio-level risk, not just position-level risk. You've also become acutely aware of liquidity risk. You've learned the hard way that just because you can get into a position doesn't mean you can get out of it at a price you find acceptable. You've been stuck in a thinly traded stock, watching the bid-ask spread widen to ridiculous levels, realizing that closing the position will cost you 5 or 10% just in slippage. So now you pay attention to volume. You pay attention to spreads. You think about whether you can exit quickly if you need to. You've learned that the ability to get out is more important than the opportunity to get in. And perhaps most importantly, you've learned to respect tail risk, the risk of events that seem unlikely but would be catastrophic if they occurred. You've lived through enough market crashes, flash crashes, overnight gaps, surprise announcements, black swan events, to know that impossible things happen with surprising regularity in the markets. You've learned that risk models that assume normal distributions are dangerous because markets don't follow normal distributions. The tails are fat. Extreme events happen far more often than the models predict, and so you've built safety margins into everything you do. You never use your full buying power. You never risk so much that a worst-case scenario would destroy your account. You always keep some powder dry. You always maintain the ability to survive another day, to trade another week, to be around for the next opportunity. Because you understand at a bone-deep level that in trading, survival is victory. If you can stay in the game long enough, if you can avoid the catastrophic mistakes that blow up accounts, if you can just keep compounding small edges over time, you will win. Not because you're smarter than everyone else, not because you have a crystal ball, but because you respect risk more than almost everyone else, and in a game where most players eventually self-destruct, simply not self-destructing puts you in the top tier. The 6th sign you're turning into a profitable trader is that you've stopped blaming external factors for your losses and stopped crediting external factors for your wins. You've taken complete ownership of your results. This is a profound psychological shift that's easy to describe but incredibly difficult to achieve. The human brain is wired to protect the ego. When something goes wrong, we naturally look for external explanations. The market was manipulated. The market makers were hunting stops. The Fed made an unexpected announcement. The CEO lied on the earnings call. There was a geopolitical event that nobody could have predicted. And sure, sometimes these things happen. Sometimes external events do impact your trades. But the profitable trader recognizes that these explanations, even when they're true, are useless. They provide no learning opportunity. They provide no pathway to improvement. They're just stories we tell ourselves to avoid confronting the real issue, which is that we put our capital at risk, and we're responsible for managing that risk regardless of what the market does. When you take a loss now, you don't spend time complaining about what the market did to you. You spend time analyzing what you did, what you could have done differently, whether there were warning signs you ignored, whether you violated any of your rules, whether you sized the position appropriately, whether you should have even been in that trade in the first place. You've adopted a mindset of radical responsibility. Every trade outcome is your responsibility because you chose to enter that trade. Nobody forced you to buy those shares. Nobody made you hold through that earnings report. You made a decision based on incomplete information, as all trading decisions are made with incomplete information, and the outcome is on you. This might sound harsh, but it's actually incredibly empowering. Because if everything is your fault, then everything is within your control to fix. If your losses are caused by external manipulation or bad luck or market irrationality, then there's nothing you can do about it except hope for better luck next time. But if your losses are caused by your decisions, your execution, your psychology, your process, then you can analyze those factors, identify the problems, and make adjustments. You have agency. You have the ability to improve. The flip side of this is equally important. You've also stopped crediting external factors for your wins. You don't pat yourself on the back for getting lucky on a trade that went your way despite you breaking your rules. You don't convince yourself you're a genius because you happened to buy a stock right before it got a takeover bid that nobody saw coming. You recognize that in the short term, luck plays a massive role in trading outcomes. You can be right for the wrong reasons. You can be wrong in your analysis, but still make money because the market moved in your favor for completely different reasons than you anticipated. And if you allow yourself to believe that those wins validate your process when they actually don't, you're setting yourself up for disaster. You're reinforcing bad habits. You're learning the wrong lessons. So you evaluate your wins with the same critical eye that you evaluate your losses. Did you follow your process? Did you execute according to your plan? Did you manage risk appropriately? If the answer is yes and you made money, great. That's what's supposed to happen when you trade with an edge. If the answer is yes and you lost money, that's fine too, because you did your job and sometimes the market just doesn't cooperate. But if the answer is no and you made money, that's actually a problem, because you got rewarded for doing the wrong thing, and that's dangerous. This level of self-honesty is rare. Most people can't look at their trading objectively. They can't separate their ego from their equity curve. They need to believe that their wins prove they're smart, and their losses were caused by factors beyond their control. It's a psychological defense mechanism, but it's also a guaranteed path to mediocrity, or worse, in trading. The profitable trader has moved beyond ego. They've embraced what the Stoic philosophers called the dichotomy of control. They focus entirely on what they can control, their decisions, their execution, their discipline, their preparation, and they accept with equanimity everything they cannot control, which is most of what happens in the market. They don't waste energy being angry at the market for going down when they're long or going up when they're short. The market doesn't know they exist. The market doesn't care about their position. The market is just price discovery in action, millions of participants making billions of decisions, creating patterns and trends and volatility that the individual trader must navigate. Getting angry at the market makes as much sense as getting angry at the ocean for having waves. The seventh and final sign you're turning into a profitable trader is perhaps the most transformative of all, and it's this. You've completely redefined what success means to you in trading. You've stopped measuring yourself against some arbitrary standard of wealth or income. You've stopped thinking that you need to make a certain amount per month or achieve a certain account size to be successful. You've let go of the fantasy of quitting your job in 6 months, or retiring in 2 years, or making enough money to buy a house in cash. Instead, you've embraced a much more nuanced, much more sustainable, much more realistic definition of trading success. Success now means following your process consistently. Success means improving your skills incrementally over time. Success means maintaining your emotional equilibrium regardless of market conditions. Success means still being in the game a year from now, 5 years from now, 10 years from now. Success is measured in survival and sustainability, not in dramatic gains or impressive percentage returns. This shift in perspective is the culmination of everything we've talked about so far. It represents the full maturity of a trader, the point at which you've finally internalized all the hard lessons that the market has been trying to teach you. When you started trading, you probably had a very specific financial goal in mind. Maybe you wanted to make an extra $1,000 a month. Maybe you wanted to double your account in a year. Maybe you dreamed of turning $10,000 into $1 million. These goals were probably what motivated you to learn about trading in the first place. They gave you something concrete to work toward. They made the effort feel worthwhile. But over time, you discovered something that nobody warns you about when you're starting out. You discovered that arbitrary financial goals are not only unhelpful in trading, they're actively harmful. They create pressure. They create expectations. They create a psychological environment where you feel like you need to make something happen, like you need to force the market to give you the returns you've decided you deserve. And the market doesn't work that way. The market doesn't care about your goals. The market provides opportunities when it provides them, not when you need them. Some months will give you amazing opportunities, and if you execute well, you'll make great returns. Other months will be choppy and difficult, and if you execute well, you'll preserve your capital and make little or nothing. And that's fine. That's normal. That's how trading actually works. But when you have a fixed financial goal, when you've told yourself that you need to make 5% this month, or you've failed, then those choppy, difficult months become psychological torture. You start forcing trades. You start taking setups that don't quite meet your criteria because you're behind on your goal and you need to catch up. You start increasing your position size beyond what your risk management allows because normal-sized positions won't get you to your target fast enough. You start holding losers longer than you should because taking the loss would mean admitting you're not going to hit your number this month. In other words, you start doing all the things that destroy trading accounts, all because you're trying to impose your will on the market, trying to make it conform to your arbitrary timeline and your arbitrary expectations. The profitable trader has learned to let go of all of that. They've learned to trust the process and let the results be whatever they're going to be. They've learned that trading is not a linear path to wealth. It's a probabilistic endeavor where you're trying to maintain a small edge over a large number of trials. Some trials will go well. Some will go poorly. But if you execute your edge consistently, if you manage risk properly, if you stay disciplined through the inevitable ups and downs, the mathematics will work in your favor over time. This doesn't mean you don't have goals. It means your goals have changed. Your goal now is to make 0 unforced errors today. Your goal is to wait patiently for your A-plus setups and take every single one of them when they appear. Your goal is to cut your losses quickly and let your winners run exactly as your strategy dictates. Your goal is to review your trades at the end of each week and honestly assess your adherence to your process. These are goals you can control. These are goals that, if achieved, will naturally lead to profitability over time. But they don't come with the psychological baggage of needing the market to cooperate, needing EU outcomes to go your way, needing external validation that you're on track. They're entirely internal. They're entirely within your sphere of control, and that makes them achievable in a way that financial goals never are. You've also probably noticed that your relationship with money itself has changed. In the beginning, every dollar of profit felt significant. Every dollar of loss felt painful. You were deeply emotionally connected to the specific amount of money moving in and out of your account. But now you think in percentages and in terms of risk units. A 2% gain is a 2% gain whether it's $200 on a $10,000 account or $20,000 on $1 million account. A loss of one risk unit is a loss of one risk unit, regardless of the dollar amount. This abstraction is psychologically protective. It allows you to make decisions based on the mathematics of the trade rather than the emotional impact of the dollar amounts involved. You've learned to think like a casino rather than like a gambler. The casino doesn't care if any individual player wins or loses. The casino knows that if they have an edge and they play enough hands, they will be profitable over time. Individual outcomes are irrelevant. The aggregate is all that matters. You've adopted the same mindset. You don't care if this particular trade wins or loses. You care that over your next 100 trades, if you execute your strategy faithfully, you will be profitable. This long-term probabilistic thinking is the hallmark of professional trading. It's what allows you to take losses without emotional devastation. It's what allows you to win without overconfidence. It's what keeps you grounded, focused, and disciplined through all market conditions. And it's also what makes trading sustainable as a long-term endeavor. Because if your sense of success is tied to short-term results, you're going to be on an emotional roller coaster that will eventually exhaust you. You'll burn out, you'll quit, you'll decide trading isn't for you. But if your sense of success is tied to process, to continuous improvement, to professional execution, then you can sustain this for decades. You can weather the drawdowns because they don't threaten your identity. You can enjoy the winning streaks without becoming attached to them. You can show up every day and do the work regardless of what your account did yesterday or last week or last month. There's something else that happens when you redefine success this way. You stop comparing yourself to other traders entirely. You stop feeling envious when you see someone post about making 50% in a month. You stop feeling inadequate when you read about traders managing hundreds of millions of dollars. You stop feeling superior when you see someone blow up their account, because you recognize that everyone is on their own journey. Everyone has their own goals, their own constraints, their own definition of success. A professional trader managing institutional money has completely different objectives than a retail trader building a personal account. A full-time day trader has a different relationship with the market than someone who trades part-time around a career. A young trader with decades ahead of them can take risks and learn from mistakes that would be inappropriate for someone trading their retirement funds. There is no universal standard of trading success. There is only your standard, your goals, your process, your journey. And once you fully accept that, once you stop looking sideways at what everyone else is doing and focus entirely on your own development, that's when you experience the final transformation from aspiring trader to profitable trader. So let's bring this all together. Because if you're experiencing most or all of these 7 signs, you're in a very special place. You're in the minority. You're among the small percentage of traders who have done the psychological work, who have paid the tuition in the form of losses and mistakes, who have developed the discipline and the emotional regulation required to actually make money in the markets over time. You've stopped chasing home runs and started appreciating consistency. You've stopped comparing yourself to other traders and started competing only with your past self. You've become obsessed with process rather than results. You've learned to find trading boring, which paradoxically means you're finally doing it right. You've developed a deep respect for risk that informs every decision you make. You've taken complete ownership of your outcomes, both wins and losses, and you've redefined success in terms that are sustainable and within your control. These aren't small changes. These aren't minor adjustments to your trading approach. These are fundamental transformations in how you think about markets, about money, about yourself, about what it means to be a trader. And if you've made these transformations, or if you're in the process of making them, you should feel genuinely proud of yourself. Not because you've become a millionaire, not because you're posting incredible returns on social media, but because you've become a professional. You've developed real skill in one of the most difficult endeavors a person can undertake. But I also want to be realistic with you about what comes next, because becoming a profitable trader doesn't mean your challenges are over. It doesn't mean trading becomes easy. It doesn't mean you'll never have another losing trade or another losing month or even another losing year. The market is constantly evolving. Strategies that work today may not work tomorrow. Your edge may erode over time and require adaptation. You will continue to face psychological challenges, moments of doubt, periods of frustration. The difference is that now you have a framework for dealing with these challenges. You have a process you trust. You have discipline you've cultivated. You have perspective you've earned through experience. You know that drawdowns are temporary. You know that if you keep executing your edge, the mathematics will work out over time. You know that the goal is not perfection, but consistent execution of an imperfect strategy in an uncertain environment. This knowledge, this perspective, this is what will carry you through the difficult times that inevitably lie ahead. And make no mistake, there will be difficult times. There will be periods where nothing seems to work, where every trade you take seems to immediately move against you, where you start to question everything you've learned. These periods are not signs that you've failed or that trading doesn't work. They're just part of the territory. They're the cost of doing business in a probabilistic endeavor. The profitable trader knows this and accepts it. They don't panic during drawdowns. They don't abandon their strategy after a string of losses. They trust their process because they've back-tested it. They've forward-tested it. They've executed it through various market conditions. And they know it has an edge. They know that variance is real, that luck plays a role in short-term outcomes, but that skill dominates over sufficient sample sizes. So they keep showing up, they keep executing. They keep doing the boring, disciplined, consistent work that profitable trading requires. And over time, over months and years, they build wealth slowly and sustainably, without drama, without excitement, without the emotional highs and lows that characterize losing traders. This is the reality of profitable trading. It's not glamorous. It's not something you'd want to make a movie about. It's just professional execution of a mathematical edge, day after day, week after week, year after year. And if that sounds boring to you, if that sounds disappointing compared to the fantasy of trading you had when you started, then congratulations. That means you're finally ready to actually make money in this business. That means you've completed the psychological transformation from gambler to professional. That means you're finally turning into a profitable trader. And that, more than any specific dollar amount in your account, more than any single trade or any winning streak, that transformation is the real achievement. That's what separates you from the 90% of traders who never make it. That's what gives you a genuine chance at long-term success in the markets. So embrace these signs. Recognize them in yourself. Understand that they represent progress, not regression. Understand that becoming boring is becoming profitable. Understand that the journey you're on, the transformation you're experiencing, is exactly what needs to happen for you to succeed. The path to profitable trading is not about finding the perfect strategy, or the perfect indicator, or the perfect setup. It's about becoming the kind of person who can execute an imperfect strategy consistently in an uncertain environment. And if you've experienced these 7 signs, if you recognize yourself in this description, then you're well on your way to becoming that person. You're finally turning into a profitable trader, and everything you've learned, everything you've sacrificed, every lesson the market has taught you, it's all been worth it. Keep going. Stay disciplined. Trust your process. And remember that in trading, survival is victory, and consistency is the path to wealth. Now I want to hear from you because this journey we've talked about today, this transformation from aspiring trader to profitable trader, it's not something you make in isolation. So here's what I want you to do right now. Take a moment and think about which of these 7 signs you're currently experiencing. Maybe you're recognizing yourself in all of them. Maybe you're only seeing yourself in 1 or 2. Either way is perfectly fine because awareness is the first step to transformation. Drop a comment below and tell me which sign resonated with you the most. Tell me which one you're struggling with right now. Tell me where you are in your trading journey. Are you still chasing home runs or have you learned to appreciate consistency? Are you still comparing yourself to other traders or have you turned that competition inward? Are you focused on results or have you shifted to being obsessed with your process? I read every single comment, and I can tell you from experience that the traders who engage with this content, who take the time to reflect on their own development, who are willing to honestly assess where they are and where they need to go, those are the traders who make it. Those are the ones who eventually break through to consistent profitability. And if you're not there yet, if you're still struggling with some of these psychological barriers, that's okay too. The fact that you watched this entire video tells me that you're serious about your development. It tells me that you're willing to do the work. It tells me that you understand that trading success isn't about finding the magic indicator or the perfect strategy, but about transforming yourself into the kind of person who can execute consistently under pressure. And speaking of transformation, if you found value in this video, if these 7 signs helped you understand where you are in your journey and where you need to go next, then do me a favor and hit that subscribe button right now. This channel is dedicated to helping traders make exactly this transformation from emotional, inconsistent, gambling-based trading to professional, disciplined, process-focused trading. Every video I create is designed to challenge your assumptions, to make you think differently about markets and money and risk, to give you the psychological tools you need to succeed in this incredibly difficult business. And if you subscribe and turn on notifications, you'll be the first to know when I release new content that can help you continue developing these skills. I also want you to hit that like button because it tells the algorithm that this content is valuable, and that means more traders who need to hear this message will actually see it. One of the tragedies of trading education is that the loudest voices are often the worst teachers. The people promising quick riches and easy money get all the attention, while the real professionals, the ones teaching the boring truth about discipline and process and risk management, they get drowned out. By liking this video, by engaging with this content, you're helping to amplify the right message. You're helping other traders find the information they actually need instead of the information that just sounds exciting. Finally, share this video with another trader who needs to hear it. You probably know someone who's struggling right now, someone who's stuck in that cycle of exciting wins followed by devastating losses, someone who's still chasing home runs, someone who's still comparing themselves to everyone else, someone who's still measuring success by short-term results instead of long-term process. Send them this video. It might be exactly what they need to hear right now. It might be the catalyst that helps them make the same transformation you're making. And here's the thing about sharing valuable information in trading. It doesn't diminish your edge. Teaching someone else about psychology and discipline and risk management doesn't make it harder for you to be profitable. The market is big enough for everyone who has the mental discipline to trade well. Your real competition isn't other traders. It's yourself, your own psychology, your own tendencies towards self-sabotage. So share freely. Help your fellow traders. Build a community of people who are committed to professional development rather than get-rich-quick fantasies. That's how we all get better. That's how we all improve. And that's how we create an environment where more traders actually succeed instead of becoming statistics in the failure rate. So, go ahead right now. Comment below with which sign resonated most with you. Hit that subscribe button. Smash that like button. Share this video with a trader who needs it. And most importantly, go back to your charts with a renewed commitment to process over results, to consistency over excitement, to long-term thinking over short-term gratification. Because that's what this whole journey is about. That's what separates the profitable traders from everyone else. And now that you know the 7 signs, now that you understand what this transformation looks like, you have a roadmap. You know where you are. You know where you need to go. And you know what you need to do to get there. So get after it. Do the work. Trust the process. And I'll see you in the next video where we'll continue developing the skills and mindset you need to succeed in this incredible, challenging, rewarding business of trading. Until then, trade safe, trade smart, and remember that in this game, survival is victory.